Dan Perkins here to share more financial and life skills information with you. Today I want to review the world of mortgages available and what each type of mortgage is best for. Make sure you watch all the way to the end to get all of the information and addresses offered. Grab a notebook and pen and take notes on what you learned today. Remember that writing down the information and reviewing it brings change into your life. Now let's begin with conventional loans. Conventional home mortgages, unlike government-backed loans, are not insured by federal agencies. As a result, lenders have their own requirements and offer these loans based on your individual financial strength. Here's a breakdown of the typical requirements for a conventional home mortgage. Generally, a credit score of at least 620 is recommended, though some lenders may require a higher score for most favorable interest rates. Similar to government-backed loans, your DTI, or debt-to-income ratio, will be considered. Most lenders prefer a DTI ratio below 45%, ensuring you have enough income to manage your mortgage payment alongside other debts. Conventional loans typically require a minimum down payment of 3%. However, a 20% down payment is ideal to avoid private mortgage insurance, or PMI. PMI is an additional monthly expense that protects the lender in case of default. With a larger down payment, you demonstrate stronger financial commitment and reduce the lender's risk. Lenders will typically want to see a steady employment history, often for at least the past 2 years. You'll likely need to provide documentation of your assets, such as a bank statement and investment accounts, to demonstrate your financial reserves. Just like government-backed loans, an appraisal will be required to determine the property's value and ensure it meets the loan amount. You'll be required to have homeowners insurance to protect the property from damage or loss. There may be additional requirements, and they may vary by the lender. Some lenders may require proof of reserve funds to cover unexpected costs after closing. If you have a high DTI, or debt-to-income ratio, you will probably need to explain any debts and your ability to manage them with a mortgage payment. Overall, qualifying for a conventional loan requires a strong credit score, a healthy financial picture, and a solid down payment. While there's no one-size-fits-all approach, these are the general benchmarks lenders use to assess your eligibility. Now, here are some additional points to consider. Conventional loans come in various types, such as fixed-rate mortgages, where the interest rate stays the same, and adjustable-rate mortgages, where the interest rate can fluctuate. Make sure you find the one that suits your financial goals and risks. Now, the terms, by understanding the requirements and shopping around, you can increase your chances of securing a favorable conventional home mortgage. Now, let's review government-backed home mortgages, which are another form of lending that, while offering benefits like lower down payments and competitive interest rates, do have specific requirements. Here's a breakdown of the general requirements for these loans. This varies depending on the specific loan program, but generally a credit score of at least 620 is recommended. Some programs, like FHA loans, may allow scores as low as 580 with a larger down payment. I'll explain again the debt-to-income ratio, the DTI. This ratio compares your monthly debt payment, including housing and other expenses, to your gross monthly income. Most government-backed loans have a DTI limit, typically around 45%. This ensures you have enough income to comfortably afford your mortgage payment on top of your other debts. Government-backed loans allow for lower down payments, and compared to conventional loans. FHA loans sometimes require a minimum of 3.5%, while the United States Department of Agriculture, or USDA loans for rural properties, can sometimes require no down payment at all. However, a larger down payment would generally result in a lower interest rate and potentially avoid the need for private mortgage insurance, or PMI. Some government-backed loan programs, like the USDA loans, have income limits to ensure they are assisting individuals who need them the most. These limits vary by location, so be sure to check the requirements for your area. One of the requirements you need to be aware of is the occupancy requirement. Most government-backed loans require that the property to be your primary residence. This means you must live in the home as your main dwelling. Here are a few additional requirements. Homeownership counseling is available, and some programs require that you complete a homeownership counseling course to ensure you understand the financial commitment of buying a home. The property you're purchasing will need to be appraised by a government-approved appraiser to confirm that its value meets the loan requirements. For loans with a lower down payment, typically less than 20%, you may be required to pay private mortgage insurance, or PMI, until you reach a certain percentage of equity in the home. Now, these are general requirements, and specific programs may have additional criteria. Always consult with a qualified lender to determine your eligibility for a particular government-backed home mortgage program. They can explain the specific requirements and guide you through the application process. Now, here are some additional resources for further information. U.S. Department of Housing and Urban Development, or HUD, is www.hud.gov.fha. U.S. Department of Agriculture USDA loan programs is www.rd.usda.gov/programs/services/single/family/housing programs. Another type of mortgage is the VA loan. VA loans are backed by the Department of Veterans Affairs, and they offer attractive options for veterans to purchase or refinance a home. To qualify for a VA loan, you'll need to meet some basic eligibility requirements related to your military service. Here's a breakdown. Minimum service requirements are active duty. For active duty, you must have served at least 90 consecutive days during wartime, or served at least 181 days of active duty during peacetime. For the National Guard Reserves, you must have served 6 years of honorable service and be discharged honorably for reasons not related to misconduct. In some cases, service of less than 6 years may qualify if the active duty for at least 90 days, including 30 consecutive days under Title 32 U.S.C., Sections 316, 502, 503, 504, or 505. Other qualifying service is that certain spouses of deceased service members may be eligible. Some service members discharged for a service-connected disability may qualify with less than the minimum service requirements. Some additional eligibility factors that they consider are character of service. You must have been discharged honorably or under general conditions for wartime service. Generally, you can only use your VA home loan benefit once in a lifetime. Now, the minimum credit score for VA, while the VA doesn't have a minimum credit score, the individual lenders may have their own credit score thresholds, so check with them. There are some resources for verifying eligibility. The Department of Veteran Affairs, or www.va.gov/housing-assistance/home/loans/eligibility. Also, VA Loan Eligibility Center, 1-877-827-0674. Now, important to note, these are general guidelines, and specific circumstances can influence eligibility. Always consult the VA or qualified lender to determine your individual eligibility for a VA loan. Now, there are many finance avenues available, yet there's usually one that is best fit for your situation and needs. So educate yourself on what each type of loan offers, what the criteria are for each, and if you would qualify one or more of the different types. As I have discussed in previous videos, find a qualified and educated loan officer and loan company to assist you in navigating the road to your success. Remember, I will answer any of your questions from the comments section, and please remember to like, share, and subscribe. There are probably many people who could benefit from this information, so please return often for more insightful information on finances and living the good life. Thank you.